This is a market review for Friday, February 28th, 2025. Today we did have the usual 20 to 30% retrace on the weekly range, marked out by these two yellow lines over here. On the hourly time frame, we can see a bearish move to start out, take out this low, trip people in short since we had been absolutely dumping the rest of the week. We get a bullish expansion, hit 20%. Lunch comes, we retrace SMT of these lows, and then we get another expansion up to the 30% mark. Yeah, I mean, kind of the same thing. I wasn't honestly looking at what London did because London reacted off of this 15-minute playing bullish, which means we played bearish, which is why I was okay seeing this come down here. But I knew that higher time frame we were looking to hit that retrace, which is why I was bullish on the day. We can see here a 15-minute where price came back up, algorithm resumes, we hit it, come back down to this 5-minute, and then get the real expansion after that. We also have this 15-minute inverse. It'll be easier to see on the lower time frames, but we get a validation here, and then once we come up here, take out this high, close above it, we come down, retrace, hit it, and then we expand higher. Yeah, you can see it here. Yep. Get a validation here. Again, market opens, comes down, takes out this previous weekly low. Come up, as you can see, there's a lot of wicks here. Price wasn't the cleanest in the morning by any means, and I'll go over how I fell victim to that. But we have these relative equal highs up here. Price comes up, closes above it, retraces. After closing up here, reacting off this 15-minute inverse, and then expanding up again to hit this 20% mark. We have a SMT of these highs during lunch. That paired with us playing bullish during AM session. So that's two confluences sending us bearish. You'll see on the 1 minute there are entries to take this short. Profits would have been below here and here. I would have liked to see this stay intact, and honestly, I wouldn't have. I maybe would have taken fulls off here. I would think we would continue to move higher since we didn't hit the 30%. But, you know, I don't actually know what I would have done because I didn't have to think on the spot. We get an SMT of these lows because ES took out this low and Q didn't. Like I said earlier, we got a bullish expansion. There's a 15-minute gap, which is also a 5-minute. Price closes under concentric encroachment, retraces perfectly in the macro. Retrace stops and starts playing bullish, taking us all the way up to where we closed for the week. Now here you can see more of the, here's London session, reacting off this gap over here, playing bullish, and then leveling out, leading to New York playing bearish first, taking out this low. So for the first 5-6 minutes, so I would say until here, right? So 11 minutes, I was thinking price would be clean today, just because we get such a clean expansion downwards, take out this low, clean reversal upwards. This closure here kind of sketched me out with these highs. We closed within this inverse, right? We get the validation with this reaction here. Closed within here, but we wicked down to this one. Got an expansion, kind of meandered. I was waiting for a retrace to get the macro. We get that retrace, stop within this 1 minute again, which is anchored over here, validated here. So if we extend that, we can see the closures are close enough, right? So this is confirmation 1. This blue arrow is my first attempt at an entry, right? Price closed up here. I saw this inverse validated here. set my limit order there. If we look at this low, it's 580.75, and this low is 580.50. Now, at the time, I think the spread was either, well, it had to have been either 0.5 or 0.75, so I didn't get into this one, which is unfortunate. However, I would have been at break even because this is what the trade would have looked like. With how price was acting here, I would have put my stop here and this, right? So this high would have been my break even, and this high would have been my profit one. All right, just like that. And obviously, we hit this, retrace, immediate rejection, which tells you it's going to come down pretty low. So that would have stopped me at break even there. Price does react off this inverse. I see that. We get another bullish expansion. Once this candle closed, I saw this reaction. This buy side imbalance, sell side inefficiency there. I saw us come up, close, open, and reject off of it. Validates this. So as soon as we closed up here, I put my limit order here on the low of this candle, which is 611. And the low of this candle is 611.25. So again, I didn't get tripped in by, a matter of ticks. Then this candle here also rejected off of this fair value gap, right? This sell side imbalance, so buy side inefficiency. Oh, sorry, I misspoke. This here is a reclaimed bullish. This is not a inverse. This is a reclaimed bullish fair value gap, or would have been. But again, reacted off this sell side imbalance, buy side inefficiency, validates it, expanded, closed, limit order up here. Again, low of this candle is 617, low of this one is 617.75. So again, matter of ticks. Profit one was up here at this line for both of these trades. That would have gotten hit. I would have stayed in, not gotten out at break even. And then finals would have been 20%. So that would have been hit. But it's nice to know that I would have been right, but it would have been nicer to actually, I don't know, get in the trade. Things that I can do to avoid this, I could possibly put my limit order a little above it just to prevent this. Maybe I put it a tick or two above, because that's on a micro, that's 50 cents per contract. Yeah, and odds are, if it comes down that close, it's good enough. So I might actually do that. SMT of these highs during the macro, right? During the macro, after bullish expansion, SMT, this is like an A+ setup during the macro, reversal time, and an SMT. So the entry would have looked something like this on this low. Stop would have been realistically above this high, and then bulls would have been there. I may have closed with this. I may have, because this is a little beyond coloring outside the lines. But again, with how today's at least AM sessions price acted, it kind of fits, honestly. But we close out of it, come up, react off the high anyways, and then get another displacement lower. Oh, sorry, completely forgot to talk about this. This is where you saw in the 5-minute candle closed retraced. So once I saw us take out this high, close above it, and then start retracing, I extended this 15-minute further across, expecting it to reverse from there. And of course, as we have seen previously in the week and in previous weeks, if AM session's bullish, lunch session is usually bearish. So we get an SMT of these highs. Well, first let me speak about this. We retraced, right, continuing the bullish action, a rally up here during the macro, below equilibrium. Equilibrium here. Where's the closest inefficiency below that? Here. So that's the one we hit. Expansion up, SMT of these highs. We get a huge expansive candle. I mean, it's 50 handles in a single, in 1 minute. We get a validation of this True Value Gap here, this high, in my opinion. And then this expansion, price comes up into this new 1 minute fair value gap, and price taps the bottom of it. So we tap the top and we tap the bottom. Both of those would not have gotten me filled. That's just kind of what's on my mind because of with the 3 times I got, I didn't get filled. So order block here looks to be what caused the reversal. Again, if we look at the equilibrium, right? Then we expand lower. London session, sorry. I don't know why I keep wanting to say London session. ES takes out these lows. We start the move bullish. Algorithm kicks back in, wants to continue the AM session run. Hit this 15-minute. It's time for us to reverse because this is a pretty decent expansion. It's what, 180 to almost 200 handles, sorry. Retrace to this 5-minute. During the macros, the low of the retrace. So we see that minute fair value up here. Not my favorite closures down here, but we see this expansion in my mind validates it. Then we get this down here again, closed out of it. Not my favorite, but at that point I would have been in there. So this is what it would have looked like. I would have been in there, and with how price was today, honestly, I would have been down here. I'm almost certain of that. I would not have pulled it here, especially seeing this price action. That does not look clean. Neither does this. So I would have been safe. I may have put it there, which would have been really unfortunate, but below these lows is safe. Profit 1 would have been these highs. Profit 2 would have been there. No, 20%. And then we could have even extended it all the way up for runners, and that would have hit. So we get that there. Again, in the macro, swept these highs. Time for retrace. Boom, no inefficiencies for us to trade. We retrace. Take out sell side. Again, last hour of trading kind of just runs away to untouched liquidity, which was up here. Since this is safe, in my opinion, because of this SMT, and we just took out the sell side here, don't want to run down here because, again, we have to retrace more. Boom, so hit up and go from there. So on a higher time frame, I don't know. To be honest, I don't really know what to expect. Ooh, well, that shows something different. Well, on the weekly time frame, I see a sweep of liquidity and a lack of continuation below it, which to me signals a bullish move up from there. Now, if that is the case, Monday, Tuesday would still likely be bearish. We may break this low, but consequent encroachment of this candle wick is a likely point of reversal, possibly. Possible low of next week. So yeah, it really depends what we get on Monday, because I could see us retrace up to here and then continue the lower move, or even just rip down. Well, we'd have to have a couple bullish days. Well, not necessarily. If we look at the 5 days this week, bearish, 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 bullish. This was the wick of the week. So, if you really think about it, Monday doesn't have to go too bearish. Heck, we could even just open in a discount and I would have been fine. But yeah, well, it's all up to market open and um, London session to determine the move for Monday. So yeah, this has been your market review for February 28th, 2025.